Uh, Good afternoon, everyone. On behalf of the Women Members Excellence Committee of ICAI, it is my pleasure to welcome you all to Yashaswini, an Idol Series 36. Yashaswini is an Idol series. Idol is a Wednesday series of programs conducted by WMEC for women CAs and by women CAs. This series is an extension of Sky High Symposium, which conducted its 100 episodes. It is one of the committee's initiatives to not only disseminate information to women members on technical upgradation and technical skills, but also empower and inspire women members to come at the forefront and realize their verbal skills at public forums. Today's session is divided into two sessions. So the speaker for the first session is CA Pracheta Patil. Let me give you a brief introduction of the speaker today. Mrs. Pracheta Bharat Patil is an accomplished chartered accountant with 12 years of expertise in direct and indirect tax, audits, and AS. She is the co-founder of a leading CA firm. She is also known for her commitment to client satisfaction and ethical practice. Also, she actively engages in social initiatives, reflecting her dedication to the community service. Over to you, ma'am.
Yeah, thank you, C. Ashika madam, for my beautiful introduction. I'm taking the topic of GST Amnesty 2024, which is very much present and hot topic in the current industry. The thing is like it was first introduced in the 53rd GST Council meeting. And because of the many changes made in the government initiatives, like from 1718, the inception from the 1st July 2017, there were so many changes, inevitable changes, and there were technical glitches. So considering this, the government has taken a new scheme, that is GST Amnesty Scheme 2024, to have to provide and relieve taxpayers affected by teething problems and technical difficulties. This GST Amnesty Scheme is basically for only 3 financial years, 17, 18, 18, 19, 19, 20, and it covers only the interest and the penalty component. No tax is required, no tax amnesty is there in that. So for the taking benefit, first the full amount of tax needs to be paid to the government, and the notices or the orders passed by the government shall be under only Section 73. Now we'll have the 4 counts of Section 73. It is first count is when there is short payment of tax, when there is no payment of tax as per the order, and when the ITC is wrongly availed. Section 73 is basically the non-fraud section. It doesn't include sections other than suppression of facts or willful misstatements. So we will go in detail each and every component introduced in section 128A from the 53rd GST Council meeting done. First component is 128A, subclause 1A, subsection A. In that, section 73, when you receive a notice, the notice should be under section 73 from the officer, and or DRC 01, the statement should be issued, but the order should not be passed as per section 73(9). Second component is the notice has been issued by the adjudicating officer as per section 73(9), but the appeal is filed with the officer and the appeal order has not been yet received by the assessee as per DRC 07. Third component is the notice is also issued, order is also issued, appeal is also filed, appeal order is also received, but the order is pending with the tribunal. In all these sub-clauses A, B, and C, it is quite obvious that only these clauses will be considered in the section 128A amnesty scheme, and we will get benefit only of these 3 components. But as we always have this past history, that whatever the section or any first amendment is done, there are two provisos to this. The first proviso is, as if then you have received notice under section 74 for the fraud case, but the assessee contests that it is not a fraud, and he goes back to the appellate authority or the appellate tribunal or the court, redetermines or remand the case back to the assessing officer that pass the order under section 73 and not under section 74, then in that case also this scheme is applicable. And the second provision is, the order is in favor of the taxpayer, but the department has filed appeal with the appellate authority. In that case, when the appellate authority gives the order that a tax needs to be made, that tax needs to be paid by the assessee, then the assessee can take the amnesty benefit under this section 128A1. So these are the two provisions. Only two provisions are there, and the three components, three cases for which the notice, order for the appellate authority, and order not passed by the tribunal. Now we'll go to the payment, how to do the payment, what is the time limit, what is, as per the notification 21/2024, it has been notified, which was notified on 1st November 2020. It states that the payment has to be done in, again, three parts. If the case is covered under 128 subclause A and 1 and A, then the payment should be made before 31st March 2025. Also, for the order received by the officer, order received from the officer, and order. One second. Sorry, sir. One second. Now is it visible, sir? Now? Okay. Now is it visible, sir? Sorry, sir, for this. Where I was actually. Yeah. So when we go towards the second provision and first provision, then we'll go to the tax payment. I'm not able to see this. Yeah. We'll go to the tax payment. The tax payment of all these three components which we mentioned for the notice and for the orders covered under section 73 only and not 74, which are the fraud cases. Then in that case, the general deadline for the tax payment is 31st March 2025. But for the first provision of section 128A, 1A, when the order is redetermined under section 73 from 74, that is the assessee contest that I'm not in the fraud section. I'm in the section 73 where there was no willful misstatement or omission or a suppression of the facts, and the appellate authority or the tribunal or any courts has held that the order should be again assessed under section 73. Then the payment will be within 6 months from the date of redetermination order as issued by the proper officer under section 73. So this is the main difference, because normal tax payment for the amnesty is 31st March 2025. But when we go to the provision section, it comes within 6 months from the redetermination order when the case falls from 74 to 73. And the second assessee was in the favor, the order was passed in the favor of the assessee, and as I mentioned earlier, the assessing officer passed a petition to the appellate authority or any higher authorities, and when the tax was demanded by the appellate authorities, then in that case if the assessee should make the payment within 3 months from the date of the receipt of the order. So these are the payment deadlines which should be followed by the assessee. Second, we will go to the next part where the how to make the payment and how, what forms needs to be availed for this thing, GST amnesty 2024 benefit. In this liability which we calculate, if the officer, the assessing party is ready to make the payment by availing the GST amnesty benefit, then he first needs to make the payment, full payment of the tax and get the benefit. For that, he needs to do from ECL, electronic credit ledger or electronic cash ledger. But when the case comes into RCM or e-commerce operator under section 9 subsection 5, then we need to 100% use electronic cash ledger for the making the payment. This is the main difference. And when again your case falls under section 16.4, which was a time barred case for the ITC liability, and when you recontest it and you get a benefit under section 16.5 and 16.6, then the assessee can take the advantage of GST amnesty scheme, obviously, by making the payment through electronic credit ledger. But in that case, we should make sure that whatever he has made the rectification application with the government as per section 16.6, he should withdraw it before filing the GST amnesty application. So we are done with how to do the payment. Now we again have the different issue when when the assessee has gone to the appeal and he has made a pre-deposit of some amount and he again wants to go again with the GST amnesty benefit, then what he has to do, he first, what I said, he first to withdraw the GST appeal, and whatever the pre-deposit amount he has paid to the government, that will be net off, and the balance amount he needs to fully pay to the government to avail the interest and penalty amnesty. Condition, hence it is called the GST amnesty benefit scheme is called as conditional waiver of interest and penalty, because there are many conditions. Before fulfilling any condition, then only you will go with this scheme. Now, for this notice under section 128A subclause 1 and order under B and C, we will go each and every aspect in detail. The payment should be done by electronic liability register, which is quite obvious. When you get an order, then it should be ELR 3. And if the DRC 03 is already made, the payment is already made, and then you are applying for GST amnesty, then first you have to make the application under DRC 03A and then link it with DRC 03 for making the further process in a perfect way. Now all the payment has been done and we have calculated which notices we have to go for the GST amnesty. Now how to fulfill, what is the waiver? Now the assessee wants a waiver. How to go with the waivers? We will elaborate each and every form in detail. For first case, when it was covered only when the notice or statement of order was issued under section 128A1, in that case, we need to file SPL 01 within 3 months from the date of the within 3 months from the date of application. And when SPL and when the order is being received from the adjudicating officer or any appeal officer, then we need to do SPL 02 within 3 months from the date of the application. Now, the application we have forwarded to the government. Now, the proper officer will think whether we will go with whether it is the application is in proper, the application is proper and go with the rules and regulations with the amnesty scheme or not. If the officer thinks it's perfect, then he will give you SPL 05, that is your application has been accepted and you have given the GST amnesty benefit of interest and penalty. So you are free from the financial burden of the further penalties and interest. But if the officer thinks that it should be reinvestigated or revised or any other additions or modifications to be done in your order, then the officer will give you show cause notice under SPL 03 and it should be properly answered within 1 month from the date of receipt of the order under SPL 04. So this is the main criteria for getting into the detailed things. Detailed procedure. One second, I'm just opening the slide. Yeah. When I give the reply within 1 month from the receipt of SPL 03 through SPL 04, the officer will still find, if it finds that reply is found satisfactory, it will give approval in GST SPL 05 again. But if it is not satisfactory, then rejection will be received in GST SPL 07. Again, this is this last stage when we can appeal for the final order. When I appeal for the order which are the rejection for against SPL 07, if it is approved, then I will be receiving SPL 06. But again, it is rejected as per SPL 08. Then I cannot go for the further appeal, and I need to recontest my previous proceedings, and I cannot go again with the GST amnesty benefit. So this is the rules and regulations which was been introduced in the Finance Act 2024 under Rule 164, which was introduced with the GST amnesty scheme and lined with 128A, which was this rule was also introduced with it. What now the proper officer now that we have filed a GST application and we find it satisfactory, then for all financial years, if I go for the amnesty benefit, then care should be taken that for the further issues, years, I should not get that respective. I should not take into consideration the respective orders into timeline. So whatever, if there are merger of orders like 17, 18, 18, 19, 19, 20, 20, 21 and 22, 23, whatever the continuous orders, if I am receiving, and then the assessee will only get the benefit of the 3 financial years from the inception of GST. That is 17, 18, 18, 19 and 19, 20. So these are the 3 major financial years for the amnesty scheme and not the subsequent years. But in that case, if I'm getting only one order for the all 3 financial years, the assessee should pay the full amount of tax, interest and penalty for the respective subsequent financial years and then go for the GST amnesty scheme. This is not, the scheme is not only for the all financial years, it is only for the 3 financial years taken into consideration. Whatever the key highlights are there, whichever I mentioned, it is only applicable for 3 years, and the penalty and interest will be waived off. To avail the benefits, the payment should be made before 31st March, and no refund will be made if interest or penalty already paid. This is the major crux, because if before GST amnesty, I have made the total demand, that is the tax plus interest plus penalty, and I still want a refund because of GST amnesty for interest and penalty. So this is not the case. We cannot get a refund for the interest and penalty already paid, because the history shows that whatever the government we have already made the payment, we cannot get again the refund for any amnesty through any amnesty. So this is a different aspect. And if it doesn't cover the cases of IGST or which are governed by the Customs Act 1962. So what the GST amnesty scheme only covers the CGST Act. So if we want a refund under IGST or any IGST tax to be paid, so it doesn't cover the demand order issues under Customs Act. So this is a different we cannot go into that. Also, erroneous refund. In case of erroneous refund, also, if the assessee wants the waiver of the scheme, it is not applicable, because as it mentioned in the first only, it is only applicable for Section 73, for which there are no fraud cases, only the short payment or the no payment or ITC non-utilized or underutilized cases comes into the picture. So when there is an erroneous refund or a fraud or misstatement or operation of the facts, under Section 74, this cannot be considered into the picture. And no further appeals can be filed once the proceedings are concluded. That's what I told you, that after SPL 08, that whatever the final appeal order from the GST amnesty officer, we cannot again file any further appeal for this. The proceedings will be final, and again whatever the officer has demanded in the order, that will be concluded as a final order, and you cannot again go for the appeal. So the task is, before coming into picture, the 1st November 2024, whatever the scheme is coming into picture, the first thing we should do is just list down all the cases where the assessee can take actual benefit, where there is actual tax, and there was no fraud in that case, and there was only minor mistakes or non short payment of the tax was there. So you can surely list the cases. And other case where there was a you cannot judge that whether it is a fraud or not fraud. So please don't go for the appeal matters, sorry, amnesty matters, because it will again create a chaotic situation for you, and officer will obviously conclude your this thing tax sorry order, and not make allow you the GST amnesty benefit. Coming back to the previous slides, one second. Coming back to the previous slides where we mentioned that GST amnesty was the forms SPL 01 and SPL 02 will come into effect from 1st November, but still these have not been reflected. An advisory note has been issued that these forms will be available in first week of January, and not right now, because these the forms are under process. But whatever the forms are coming, it will help us each and every businessman to litigate, to ease the litigation matters, and reduce their financial burdens for the further years also. So this is the basic GST amnesty scheme. Now, if we go to the normal FAQs, which people deal with, it's like if I've already made the payment before, after getting my demand order, and I want to go against the GST amnesty scheme for the interest and penalty. Sure, you can go it, but there is no problem in that. You can still avail the benefit. And second thing is like, if I have already made I have not got any order or any notice, then what should be the criteria? Only the notice has been issued, not only the no order has been issued. Then again, if it is 1718 also, I tell you personally, guys, that please don't wait for the GST amnesty scheme to take the benefit. It is always, if you think that the order is in your case, then please make an appeal. And if you make an appeal and then go for the GST amnesty, then at least you will pre-deposit the required amount, and after the appeal procedure has been started, and you are parallelly going for the GST amnesty, withdraw the appeal. At least you can get a clear picture. Whatever the facts are mentioned in the appeal are true to the nature, and you can still show to the officer also that I have appealed and these are where the facts. There was no fraud or no misinterpretation of the facts was done by me. Third case is like I want GST appellate tribunal, sorry, GST order was issued against me, but I was not aware of it. And on the portal, I'm getting the orders for the respective financial years, not for 17, 18, 18, 19, 19, 20, but from 2021 onwards. So can I still get the benefit? Obviously, no, because this scheme is only for the 3 financial years. You can still not go for any further financial years for taking into consideration the judge contention of the government, intention of the government. And when I go for the GST amnesty, one second. When I go for the GST amnesty, there is always the thing to be maintained that it is benefit for the taxpayers, but also for the government also, because each and every scheme has its own benefits and disadvantages. This scheme has disadvantages that it doesn't allow the appeal, sorry, office assessee to have a overview judgment over the problems. If you think that you can go still, my suggestion or any other learned council suggestion is always go to first make a appeal and then go for the GST amnesty, and then you can withdraw the application. Second thing is like, if I go for this scheme, I have many issues. I have many issues like I'm not able to trace the whatever the financial key benefits are there. So I suggest that it will really stable the government revenue also, and address blockages, reduce the penalties of the overdue GST returns too. So I think I'm closing this topic because I have done most of the GST amnesty scheme, which was very much small before deadline of 4 p.m. If I'm open to question answer, because the PPT I presented was very much to the line with the GST amnesty. And if there are any questions, I'm free to take up on this. Hello?
Yeah, so far there are no questions, sir.
Okay. So, should we end this session, sir?
So, yeah, so is there anything else which you want to add, or
Sorry?
so is there anything else which you want to add, because there are no more questions right now?
Actually, most of the where I have actually taken into consideration whatever the mentioned in the circular. I've
Yeah,
taken
yeah.
the same. Yeah. Section
So,
128, Section 2024, and Rule 164. These were the main sections and notifications which was taken into this session. This was a small session basically. So
yeah, yeah. So no issues. Thanks a lot for sharing your knowledge on the subject, and your expertise and your experience and insights would help our audience. And thanks for your time. Uh, and we can proceed further with the rest of the session.
thank you, ma'am.
Thank you, ma'am. Thanks.
Bharti ma'am, please start with the introduction of second speaker.
CA Awards. She founded CA Focus Advisory Service, creating key employment opportunities for aspiring chartered accountants. An alumnus of IIM Calcutta's CFO program, Falguni was also incubated by IIM Bangalore and honored by Goldman Sachs as one of the top 10,000 women entrepreneurs.
Falguni ma'am, are you there? Falguni ma'am? Yeah, we are calling Falguni ma'am. Bharti ma'am, Falguni ma'am is joining. So once she joins, please give about her like again.
Good afternoon, everybody.
Good afternoon, ma'am. Ma'am, Bharti ma'am. Bharti ma'am, are you there? Yeah, Falguni ma'am, Bharti ma'am has already introduced you, so we may maybe start with your session.
Yeah, we can start. Huh? I will just share my screen.
Yes, ma'am. Yes, ma'am.
Are you all able to see my screen?
Ma'am, yes, ma'am. Please make it slideshow. Yes, yes. Perfectly fine, ma'am. You may start now.
Okay. Okay. Good afternoon, everybody. Today I'm going to, talk about a topic that's very hot in the, as we all are aware that a lot of startups, from the past 3 years have started coming in more aggressively, and we are seeing a wave of entrepreneurship that has, led to a lot of startup companies opening in India, and uh, we are seeing very very successful startups also going to the next unicorn stage. So India today is proud to host more than 100 unicorns, and that is how the startup India is becoming more and more privilege, and it is an extremely important topic for all the chartered accountants, because many of their clients would be startups who would be looking out for funds. And for raising funds, investor deck is a very very important document, which will give them an empowerment to enable the investors to take a rightful decision to invest in the venture, in your client's venture, and thereby the clients will be able to uh, rightfully uh, go up to the growth scale which they are actually capable of. Because as you all are aware, without funds no companies can survive. We all need fund, whether the company is doing good bad, but you need funds to actually scale up your idea, to scale up your vision. So that is why investor deck is very very useful. And today's presentation, I'm keeping it at a very, very simple, very, very simple way, and a layman's language. I have made it so that we all could go to the grass level of understanding what it is going to happen. Like, just 1 second, huh? She's doing something. Here, you have to go 1 minute. I don't think it is there, no? Presenter's view. Presenter's view, hoega, no? Here it is. Yeah, correct. So let's start. This is a guide for fundraising. How do you do a startup? What is the journey of a startup? And where does fundraising come into picture? And when is in during the fundraising, what are the steps and journey that we are going to go through? So once first there is an idea, then there is a bootstrapping. What is the meaning of bootstrapping? That a person, your client is investing his own funds to develop that idea into a business. So initially the company would put, the promoters or the founders would put their own money, get the idea into a prototype, and an MVP. So prototype is like a business, to set up like what would be the front end, back end operations, how the idea will flow, what the product flow will be, whether the service flow is correct or not. And then once everything is ready and your product end to end is ready, your business is ready, that is where you will need funding now to start. Okay, you will need working capital, you will need capex for your project. So that is where seed funding comes into picture. And seed funding is always before an a pilot prototype, maybe with a very limited sales happening, numbers are happening. But to scale up that idea, now to put it in real business, you will need seed funding. And then you do operations and expansion with that. And then you do Series A and Series A fundraising. And then you scale up your business. So this is how there is a startup fundraising. So for this seed funding also, you will need an investor deck. For investor deck is a communication to the investor when you are seeking funds. You know that what is your business about. So we'll go through the steps here. So as on October 24, India is the home to approximately 100 plus unicorns. The country, as I mentioned to you, is seen a significant growth due to a lot of technology developments, AI, robotic, and automation. Lot of globalization has come across. We can see the world has shrank down. The millennium has, the definition of a generation has changed. Now it is as less as 5 years. For a decade, we used to have at least 10 years. Now the Gen Z is even lower. So after every 5 years, you can see that there is an entire revolution of a new change in a decade. So all this has led to a lot of changes in the expectations of how the businesses are also run. And fortunately, India is housing more than 100 plus successful unicorns. And the growth story is just a tip of the iceberg. And we believe that India is in a very good position right now worldwide to, in terms of consumption story, in terms of a very youthful population, and it is in a correct mix of having a lot of manufacture in India story as well. So I think India is in a very very good position right now to leverage a lot of investments from all across. And we are seeing that not only financial institutions from abroad, foreign institutions earlier were, used to invest in India, but there is a lot of domestic investors also willing to put in money in the Indian startup companies. So looks very promising. These are the numbers of how the global PEVC investments are panning out in India, and how the numbers are looking. So 1009 transactions of investments have happened in 2024, last what we are seeing. So this is how the investments are panning out. So, what are the key insights of an initial pitch presentation? That this presentation should not be more than 12 slides. Actually, I've written 12 to 15, but ideally it should not go beyond 10 to 12 slides. Why? Because you have a very limited attention span of the investor. You have a very limited attention span of the investor. So, within that attention span, you have to gain your idea and you have to put across your idea in 10 to 12 slides. So, you have to make them very sharp. You cannot give more than 10 to 12 slides. They are very keen to understand what is the real opportunity in your business. Do not share too much of numbers and details at the initial stage. It should not be. It is just investment deck is a just a communication to your investor to understand what is the real opportunity for him in that business. Okay, what is the real opportunity? So do not give too much details and do not try to deviate from the topic. Use lot of pictorial graphs, diagrams, flowcharts, and explain it very easily and simply. Do not use jargons. Make it very very simple, realistic, and with lot of pictorial graphs. Bring out the business case strongly. You bring out what is your business case, what is your value proposition. Bring that out very very clearly and strongly. These are few tips to start the presentation with the pitch deck. So when you are starting to make a pitch deck for a company, for a startup, initially do not make it more than 10 to 12 slides. Now what should be the layout and inclusions? So as we all know that the investment deck will first start with the overview of a company and the business. So it will, of course, be an overview of what the company is into and what business it is into. Second, it would be mission, vision, and value proposition of the company. So again, vision is what you want to do. Mission is going to be how you are going to do it. And value proposition is that why you are doing it, because we are going to get so and so benefit. So what is the value proposition in this? So this is the mission, vision, mission, and value proposition of the company. Then the next is the team. So the key team members, their experience and what they contribute in the business. So this is going to be the uh, prime, the team, the key team members and their experience. So put it out very strongly, because investors are really looking at that who are the second level of team, who is a team that's working on, and most of the startup investors bet on the people and their capabilities of how they are going to scale up that business and take it to a successful mode. So, as you all are aware that when you are investing in a startup company, out of 10, only one or two will come to the stage where it will be extra flourishing and very big. But to identify those, the investors would be in a very short sight, in the sense their attention span is very short. So we have to ensure that we put up very clearly the uh, experiences of the team members, what they bring in, and how they are contributing very effectively in the business. Also, what is very important is that for funding, usually investors would look out for where co founders are there. Alone for one single person, they would always want difficult for them to have a continuity plan. So they would always want a continuity plan. Uh, Second is that why ESOP is so important for startups. People say that, do you have ESOPs? So many startup companies ask me that how is ESOP so important? Why, I will ask you why they are laying so much high emphasis on ESOPs. So why important on ESOPs is that how continuity of your business is so important, that whoever is your core team, how are they going to be connected to your business idea and going to be enabling you to scale up this business till the end, till the taking it to the next level. So what is their commitment and how are they seeing the opportunity and everything. So that is why ESOP is a long term, uh, retaining employees on a long term vision with you. Okay, because ESOP is something that will monetize for the employees also when the business becomes successful. So that is why ESOP is of so much importance, that you make them also owners of your company, maybe at 1%, 2%, doesn't matter, but take them also as a equity investment so that they are long term builded with you. So what is your investment deck? It's a communication to outside world in due importance. So it has to be given, of course, due importance that it deserves. So these are some mission, vision, and taglines. Phone Pay, mission, and vision. So the vision statement is to build a large, scalable, and open transaction ecosystem that creates maximum positive impact for all stakeholders. For PhonePe, this was their vision statement, and for PhonePe, they did a mission statement was to fulfill the vision. They said that okay, to as a mission, we will to stand as a universal, seamless, and safe mobile payment ecosystem. Okay, and their tagline was also like "Kar do, bhar do, karte raho, बढ़ते jao." So Byju's was like fall in love with learning. So everybody has their different taglines. Mama Earth is goodness inside. Misho was shopping ki power to apne haathon mein. So everyone have a different tagline. You need to have a tagline that's impressive about actually conveying what your idea is. So have this mission, vision, and tagline very clearly spelled out of what you're doing, how you're doing, and why you're doing. Then another thing in the investor deck is going to be your business details. Now, what business details is, of course, we all know that we have to write down what your client is, the business that you are doing the investment deck for, that investor deck, what problem that business is solving, what solution are you providing, okay, what is the unmet demand that you're trying to meet, what is the addressable market size that you are wanting to target, okay, and what is the product or the service very clearly defined. and what is the technology you are going to use to make this a little different. How technology is going to play a very important role, and how it is going to enable your business. So the product or the service should be, presented in a way where it would speak for itself, and technology differentiator, it has to be there, correct? And this is TAM, SAM, and SOM. This is how you derive your total market size. What is your target audience? Okay, what is your saleable audience? And finally, what is your serviceable audience? I can say that my total addressable market is that globally I can provide this solution. But I'm going to, uh, only be available in India, and my serviceable, obtainable market currently would be Maharashtra. So I'm having a TAM, SAM, and SOM. So in that way, Byju's can say that all the students are my TAM, but it would still say that okay, but all my students are my TAM, but currently my SAM is that only students from English medium can be my students. And my SOM can be that only people from English medium, but between the age of 12 to 18 will be my target audience. So, what is your total addressable market? What is your serviceable, obtainable market? Both are different. So, that is why people say that you can arrive at it by doing TAM, SAM, and SOM. So now this is just a flow that I'm showing, that how do you show that where you stand. So in case if you are in a payment solution, you can say that earlier this was an offline payment, then there were online payments through aggregators. Now there is an AI payment which is direct and with the aggregator. And what is the next era? So where do you fall in this? Because you are having an evolution of a payment solution that you are wanting to sell. So this is how you will explain very clearly that how each era was having this, technology was changing, how it changed, what new things did evolve, and now how your solution is going to meet the next era. So if you explain it in this beautiful way, then the investor would be able to understand much than your entire story writing. Also, one more thing, like technology differentiation. How will you make him feel that technology differentiation is, so say suppose a global agri-business served via a single button. So we can say that today my client is this, whatever business you are writing, write down that how you are going to, like, how technology differentiation is going to make a big difference. So are you going to go local ready, or you are going to be multilingual, you are going to be multi-currency, digital and automation, how it's going to impact on your margins as well as on this. So how do you depict your competition? That is also one more very, very important thing that you have to do. So this investor deck and layout, flow and inclusion. Next is the scalability. Once you have established your product or service, once you have told them that how it's going to be resolving the problem or the solution you are going to bring in, the differentiator you are going to bring in, after that you have to explain what are the, how is going to be your business, the client's business is going to be scalable, how the business is going to be scalable. So who are your target customers? Okay, then who is your competition? What kind of traction are you currently having? What is the meaning of traction? Traction is what currently you are doing. Currently, how much business are you doing? So I'll give you an example that you are from, your client has started business from April 23, and you are making an investment deck on October 24, and in the current last year the client has done 1 crore revenue, In the current year, the client has reached in 10 months, the client has reached 1 crore. What will you say that what is your traction? What is your ARR? You know, people ask, what is your ARR? That is your latest. You can say that even in the month of October, if you have done a sale of 20 lakh rupees, you can say that my ARR is 2.4 crores. Based on the last month's sale, you will multiply into 12 and say that my traction, my ARR is 2.4 crores. And also traction is also how many customers you have already converted, what is it. So you could display it by way of a small 30-second video clip also, if you feel that that's going to be very effective. So show your traction of your product, that already it's been successfully launched and how it's doing. Then knowing your competition, which I told you earlier, was also extremely important. So competition you can depict by doing a petal diagram or a simple 2 into 2 matrix, where you are saying that low benefit, high returns, high benefit, low returns. So put your each and every aspect along with your competitors. So compare yourself and the competitor and see that how where you are lying here. Okay, in all aspects, where are you lying here? So you will come to know after that, when you put it together, that compared to my competitor, where they stand and where I stand. Okay, so it's very important to know your competition, understand where they are coming from, and even though they are going to help you grow the market in certain products or services which are very new, your competitors also help you grow the market, because it's a new service, or it's a new product, or it's a new thing. So competitors may also help, but it's very important for you to put it in a correct framework to understand that what are their strengths and how are you going to compete with them. How do you need to position your product? Then there is a reach strategy. What is your strategy? You will have to put that also in the picture of what is going to be the go to market strategy of the client. That is extremely very important. If you are in the transmission business, so what is your go to strategy? How are you going to make it subscription based, or are you going to make it advertisement based, or how is it going to be? What's your go to market strategy? Okay. And then what is your cost of acquisition? This is extremely critical when in D2C businesses specifically. Reaching the customer is a very big expense. We all know that even in e-commerce industry, reaching a customer, acquiring a customer is extremely expensive. Digital marketing has become very expensive. Physical marketing has become very expensive. So, your cost of acquisition plays a very important role to define how your business is going to be break even and profitable. Your long term lifetime value. What is your lifetime value of the customer that you acquire? Say if in maybe in a certain industry, if you acquire a customer, like in traveling industry, if you acquire a customer, you know that at least 2 to 3 times he will travel with you, minimum, now that he knows you and he has understood, he has already purchased from you. Similar way, if somebody is buying some other cosmetic material, he may say that my lifetime value of my customer is at least 5 times in the lifetime journey of 1.5 years. He will at least come 6 times to me buying different cosmetics, because I have a very wide product range. So today he may want lipstick, tomorrow he may want cream, or he may want something else. Somebody else may say that, okay, I am in the providing certain essentials which are required only once in a year. So the lifetime value of my customers is at least 2 years. 2 times he will come, this year and next year. Then again maybe I have to revive by way of spend something to reach him. So what is ROAS? ROAS is a return on advertisement spends. Okay, so return on advertisement spends is going to be that return on advertising spend, whatever cost of acquisition that you're spending, by spending that amount, you are acquiring a customer, and that customer is having an average spend. Based on that average spend, how much average yield return he is getting for you. Like, for example, acquiring a customer is 1000 rupees. In that 1000 rupees, he has purchased a product which is of 2000 rupees. So the product has a margin of 50%. So 1000 rupees is the yield. So ROAS is going to be 50%. Okay, so the ROAS is 50%. Like that, the ROAS is equal to the cost of acquisition divided by the cross margin percentage. That is going to define your ROAS. So, do you have a plan for the three P's? I'm sure you all would have identified what are the three P's. Okay, so you have to very properly plan. Planning is extremely critical. Okay, process is very important. How you're going to do it, and people are very important. Okay, who is going to do it? And when is your marketing ROI going to be positive? Okay, when I'm spending 1000, but from that spending 1000, I'm earning 200 rupee gross profit, then I at least need that customer to buy 5 times for me to be profitable with him. So that is the when I'm going my when is my marketing ROI going to be positive? Okay. So now, traction so far, you it's very critical for the investor to understand in only one slide how much have you achieved till now. What is your traction so far? Okay, so you have to show what was your cumulative gross marginal value, 193 crore. Here I have mentioned it will include your GST, it will include everything, it will include the actual cash flow that has come to you. Okay, GMV is the gross margin value. Okay, that is including everything, that the collections that you are doing. Okay, and then you say that, okay, till today I have done this much, in the one financial year I have done this much. Okay, my today's based on the ARR which I explained to you guys, this is how my next year is going to look at. So my run rate is looking at 360 crore. My out of which my B2B sale is this much. How many B2B customers are there? How much B2C customers are there? How much my B2B to C customers are there? How much is my social traction? How many followers do I have on Instagram? How many followers do I have on Amazon? How many followers I have on each and everything? Okay. So my current traction, what it is. So this is also another way of putting it, that it is of a payroll company. This investor deck is of a payroll company where it says that I'm processing more than 4 lakh employees. My monthly salary processing is more than 2 million plus. The clients that are involved are 800 plus. The companies that are potential are 10,000 plus. The salary payout is, so much million. I've done KYC of so many employees. So this is what it is showing, the current traction of how it is doing and what it is reaching. Okay. Now this is how you show your milestone and timelines also. That I did the foundation, what I achieved, in expansion, what I achieved. Now in product and innovation, what I did. Then e-commerce, what I am doing. Then future plans. Of course, because this is how I have converted into e-commerce. So each year it is showing a milestone of history of what it has done and also what it would do. Like your future plans are last tab, 21 to 24. What are the future tabs? Okay, so here it will be 2024 onwards. So how is my future going to be aligned? Your milestone can also be conveyed in this way. I'm just showing different samples for you to understand in a pictorial graph how it will be. Like the first year I achieved this much, this was the second year I increased to operations, the third year I did this, the fourth year this, and this is how I'm going to reach. I'm going to do research, and on the same day this is going to happen. Now it is going to be, one second, huh? So the investor deck layout flow for the financial model. Now the financial model is a very important part of the investor deck. So it says about numbers. So you know how numbers are also very critical and important. So how do you convey them? Do not overflow with information. Make it very simple and crisp. Okay. The first important thing that you need to be in your finance model is the unit matrix. Unit matrix forms a very important part. Now, what is unit matrix? Unit matrix is the quantitative number, okay, of how your flow is doing in terms of, say, for example, products, or for example, services. So if you are into products, you say that, okay, how many number of products have I sold? How much discount have I given? How much product return has happened? How much is my net sales? How much is my net sales after tax? And how much is my earnings per transaction? So what is my GMV per transaction? What is my uh, total net NPV per transaction? The unit matrix kind of gives you a view of your per service client or per product statistics, which is very important. Okay. After that, you have to give current financials and ARR. ARR, as I already told you, what is your latest financial based on which your future transactions are drawn out. So whatever are your current financials plus whatever is your current ARR, based on that you have to draw projections, and projected financials come into picture. And then you need to give some effective ratios to show how your business is going to be very strong and give the investor the required profit or the cash flow that it is looking for. Also, your financial model will very clearly say how is your break even sales. It will be clearly defined. It will also define very clearly what is the total capex which is required, and also cash flows, both current and projected, need to be added. Do not forget that. Your investor deck is your communication to the outside world. Give it the due importance it deserves. So I'll just show you a few things on the investor thing. So these are the financial parameters that you will be writing in: the revenue, the direct cost as a percentage of revenue, gross margin, salaries, marketing cost, administrative, technology, and EBIT. I would presume that do not make it more complicated. Just keep it simple like this. And of course, you all know how you all need to compute it, and you know how you all need to achieve it. Define your break even point very, very strongly, very correctly, so that you know that at what volume or what number of customers or services or at what sales are you going to break even, and how your revenue after that is going to span out. So whenever you are writing, your unit matrix need to come in a form of a graph where your break even will automatically be portrayed. So the unit matrix graphical presentation would go a very long way in conveying to the investor in only one slide how many number of units or services I need to sell, or I need to provide services to how many customers, and where my business will become break even. have to visualize your data. For him to visualize your data, this is how you have to put the expenditure, profit, revenue, everything in a very, whichever three parameters you feel the most important. You put it in a parameter like this, that year one I was doing this much revenue. Year two it dipped. Year three it was flat. But year four I have picked up like anything. Also in terms of expenditure, year one, two, I was increasing. But year four I have not substantially increased the how much way I have increased the revenue, because certain fixed costs have not changed. And that has given me an opportunity to scale up a little higher than what I required. And profits dipped in the first year, second year, but in the third year it has come up. So visualize your data in a very pictorial way. So what is the matrix that is used by the investors for sustainability? To understand, now that sustainable finance has become such an important part, and it is one of the most latest trends of having, your businesses are identified whether they are into sustainable finance. Okay, sustainable finance has become like a new word now. So for the investors, the B2C business, customer acquisition year on year, and how many, and price, what is the price? Okay, on year, whether they are seeing that there is a scope of increasing at least 10% of the price. In B2B, what are your pipelines of the new business? What are your client acquisition strategies? That would be really very useful. And break even point 1 to 1.5 years based on the projections, and revenue growth of 12 to 15% year on year. This is something that they would be looking at. Now, in certain businesses, break-even point may not be 1 to 1.5 years, and they would still be okay. But generally with the technology and everything, uh, there are certain businesses which require a huge capex. So over there, the period can be between 3 to 5 years. But generally, this is the way in which an assessment of sustainability by the investors would be made. The revenue projections, you could put it in this way, that this is how I'm doing the expenditure, and then the revenue, and how, out of the total revenue, this much is my expenditure and this much is going to be my profit, and how year on year that's going to grow. Okay, simple pictorial, but it will present everything what you have to say. The trend, the growth, the comparison, everything will be in one slide. I'm just giving you various parameters. You could choose one of them to show effectively. Then the layout is finally coming to, after you have presented the financial model. Out of this, whatever suits you better, you have to put it in 2 slides. Not more than that. Financial model cannot go more than 2 slides. So whatever I've told you, you have to put it, whatever is beneficial to you, which format is beneficial. Are you into product? Are you into services? Are you into a SaaS product? What is beneficial for you, put it the slide in that way. Then we are coming to the last part of it, is the ask amount. Now, this is the main important part, where investor, you are asking him that what is your ask and how do you plan to spend it. So you're seeing a graph down there. It says that I'm going to use this money for certification, for marketing, for tech development, for team expansion. So, investor deck ask amount also again needs to be in a very pictorial, very small thing, so that it's very clear to the investor that where the money is going to be put. And you will also have to do a little long term planning, in the sense to make them understand that whatever funds I'm requiring, I will be using it for this period, and this much expansion from that is possible. Post that, I would again be requiring funds, or maybe then the business may be self sustainable. So all those parts also very clearly need to come into your picture, because this is something that they would be asking. So, and also, the investor always invest with a thing in mind, that what would be my exit option. So exit option is extremely critical, and that needs to be really discussed. That need not come in the PPT, but that's something that will be very important at this stage of this ask amount slide, that it will ask you and that what is your vision, and you are taking this money, what will be his exit option, okay, and what kind of contingency plan do you have, and how much runway are you going to create by getting these funds. Sometimes it happens that you are raising something 2 crores, and finally you come to know that out of 2 crores only certain things you were able to do, and you are still again in a ask situation. So an investor would always be very careful to understand that what is going to be your total gap, and if he is fulfilling that, at least if you are able to successfully um, perform certain scalability, so that it could be helpful to raise a next round, because otherwise there would be seamlessly unnecessary pressure on the existing investor. So this is how it is, and we have to very clearly also say that what is going to be the cash burn. Initially, there may be cash burns. So what are going to be those cash burns? We'll have to be very clear in explaining that. So I think that was what my presentation was all about. I hope you all enjoyed, and I hope you all enjoyed.
Yes, ma'am.
Can we have the
It was
audience to
wonderful
speak,
session,
please?
ma'am.
Can we unmute them?
Any question?
Can we unmute the audience?
Yes, ma'am. Ma'am, audience are there at other link? Pooja, ma'am. Do
Yes,
we have
yes,
any question? Do we have any
yes, yes.
question you can ask? You
Uh,
please.
yes. Questions. I'm not able. Like, there is no question.
एक second. Let me. Are you able to check the admin link?
Yes, yes, yes. I'm in the admin link only. I'm just checking the questionnaire. That session two.
Yeah, yeah. Please check, ma'am.
Yes. So here there is no question. I'm just getting.
But are you able to unmute the audience? Will they be able to talk to us directly?
No, ma'am. They are connected with other link, so they can view yourself to all of us, and they can type their questions at other link.
Okay, I
Not
would
here.
urge everybody to really participate in this. The session is more important when it's a two-way communication. So I would really be glad if you all could share your views of how did you do your present investor presentation, and what good you do. I mean, how value addition you did to your client. Please share your experiences. That would be really good.
So I will request participants. Any questions are there? You please type it out.
Meanwhile, I request the speaker and coordinators, other speaker and coordinators are there. If we are having any questions, so we can ask from Falguni ma'am. Meanwhile, we can give 5 minutes to participant. If they are having any question, they can type. If you want to ask any questions from ma'am, so we can ask, because Falguni ma'am, it was a very wonderful presentation. You have given so many tips, like very practical tips were there. So if I think if they will all sincerely follow all your points, they can succeed. It was a very wonderful presentation, ma'am.
Thank you so much. And the reason why I kept it extremely simple was that I wanted each and every chartered accountant, when they are working with their clients and this opportunities arising where clients are requiring to raise funds. So they are always CA plays a very important role, and they want CAs to make their presentation, the pitch deck with them, and that is why I kept it very simple for every layman to understand, so that
Yes,
If
ma'am.
we make it very complicated, then the investor's sight is also very small.
Yes, ma'am. Knowledgeable in very simple terms. That it was
Yes,
a. It,
yes,
we can
yes.
say this to
Their
them very
attention
easily.
span is very little, so we have to catch our business idea to them in that short time.
Yes, 100%, ma'am.
So that is the reason why I just made it very simple and I put it in a very simple way. But I just want participants also to share their, uh, their experience of putting an investor deck into place. How what were the challenges that they faced, and what experiences they got, learnings and all that.
Yes, ma'am. We are having one, two questions. Uh, Palak, ma'am said that ma'am has explained it very well. Thanks.
Thank you, Palak.
Uh, Khush, Khushbu, ma'am is saying, ma'am, how can we as CA participate in presentation of investor deck?
Sorry, I didn't understand Khushbu's question. Can you repeat?
Yes, ma'am. How can we as CAs participate in presentation of investor deck?
Oh, y'all can definitely participate. A CA can give a strategic view to the promoter. Say, if it is my business, I know what my business is, but I would know so much of my business, know how to present, how to make it in a number format, a business idea, how to make it uh, look profitable, like how the profitable journey is of that. Everything in this investor deck, what I wrote, and CA can help the promoter because he would know his business, but to put it in this logical form, also how to put minimum, how to give impact on numbers, and like real estate company, we would say that I have so many projects. I have done 5 lakh square feet of work till now. I per square feet of commercial is giving me so much yield. Per square feet of residence is giving me X percentage of yield, and I have so many lakh of square feet in pipeline. Like a one slide shows what is your entire journey of as a real estate. So a chartered accountant can play Khushbu a very very important role, and to every business, because each business would be different, but we would know as a CA how to logically present this, and these are the 10, 12 slides should perfectly come in, in a very logical way, so that investor is able to rightly understand the business with a financial acumen.
Yes, ma'am. Ma'am, Bhakti Vora ma'am is asking for the presentation, your presentation, and she's
Sure.
asking one question. She's asking one question as well. Are there any books which we can refer to help in preparing the presentation?
There are not any books, but there are many unicorn company investor slides that are available online. If you want two, three, I will also forward you.
Okay, ma'am. Thank you so much. Ma'am, one more question we have received from Vinita Jain, ma'am. She is asking further for startup, how we decide the current valuation of the startup when the business plan is just being made, or if business is just 3 years old. Any specific input for B2C e-commerce business?
So B2C e-commerce business, in e-commerce business, they are putting a lot of emphasis on the number of customers. See, I'll give you an example of an e-commerce platform, that is Ola or Uber or even the Zomato. uh, the number of customers, even though Zomato was in red line, it was so much attractive and people wanted to invest money. Why was it? Because it had a huge database, huge active number of participants, customers that were live on its data, on its portal. So if I would come for buying, a restaurant, they were very sure that if I would order for a food, I would they could start a grocery app, and all those users will, at least 50% will convert to grocery also, and then they can even do others. Ola was very sure it could sell cars, it could do servicing of cars, it could sell insurance premiums of cars, it could do courier business. So for e-commerce D2C businesses, number of customers, and I know e-commerce is a very challenging task, because for getting volumes we are going on third party market like Amazon and all that, and those customer bases are not our customer base. So while we are doing the top line, but on our website, what we are doing is our own customers, and that acquisition cost is a little expensive, but it has a lifetime value. You have to see that cost as a lifetime value. So coming back to your valuation question, every company's branding, how it is brand, how it is positioned, how his or her product is providing a solution, which is, what is the demand of that, and what are the total number of customers it has achieved till now. On, it has an active database, that, and plus it's 3 years journey of next 3 years projections, whether it's going to be profitable, how much it's going to earn, and how it is going to dynamically do. I think that investors for one time can also keep away the marketing cost a little outside, because that you will be explaining on a lifetime value. So without the marketing cost, or taking the marketing cost over their lifetime value, if you apportion, if you are achieving profitability, then it would be your valuation. These all parameters will help you in your valuation.
Yes, ma'am. Ma'am, we are having two, three more questions. If you permit, can we take them as well?
Yes, yes, please, please.
Yes, ma'am. Yeah, Anju ma'am is saying, thanks, ma'am, for the presentation. How we can plan the exit strategy for investor?
So exit strategy for investor, every investor who's coming has a purpose, right? He wants to, of course, benefit of his investment. So what you can gain is that with his money, how much turnover are you going to raise? So, how much money you are going to raise with them? What is going to be your runway? And with that, what kind of top line are you going to achieve? So, after achieving that top line, next, what is your plan? Are you going to raise Series A? Are you going to go public listing on SME board? Are you going to, what kind of further funding would be available to you? Because right now you are a small, so only seed funding is available. But of course, when you scale up, more funding will be available. So the exit strategy should be in such a way that you are aware about what is going to be your next level when you will require the funds, and at that time, what kind of capital growth are you going to option you are going to select. So that you have to tell the investor. Say, suppose if you are doing a seed funding, then you have to tell him that I'm going to raise a Series A funding in so and so year after reaching so and so top line. So this is going to be your exit time if you want to exit. Or if you're doing a Series A round, you tell him that after doing this Series A round, I'm going to reach a top turnover of this much, and after that, I'm going to go for SME listing. So your exit will be at that time. So he should be very well aware कि मुझे जब तक if your runway is 2 years, till 2 years I won't get any exit option. Till I reach that another scale where I'm ready now to raise another funding. So this is what the investor is looking at. He doesn't mind holding, but he just wants a clear direction, a clear indication of what will be his exit, when will it be, and how it will be.
Ma'am, one more question. Sai Janani Gopal from Chennai, ma'am is asking, from the investor point of view, what is the most important factor that he is interested, looks for in the deck amongst other factor?
The most important factor that the investor is looking out for is that today I'm investing 10 rupees. The valuation of this company, will I be having an exit option of, will I be able to earn money and sell this at 30 lakh valuation? I'm just giving a hypothetical example of an amount. It can be 30 crores also. What I'm saying is that investor is only looking at one line. Is this business scalable, profitable, and sustainable? Whatever business or service you are into, put this in three parameters. Is this scalable, sustainable, profitable? If in case I have a very beautiful business that I am running and I'm earning 10 crore rupees, okay, it's a very boutique kind of consulting, I'm earning 10 crore rupees. Still, not many investors would be interested, because they will ask, what is the scaling up? And if I say that I don't want to scale up, then they would say, okay, oh, your margins are 100%, but what is the use if it's only going to be restricted to 10 crores? But somewhere margins are 10%, but they are going to do 5,000 crore business. So they are going to get 500 crores. So it should be scalable. जो भी business करो scalable है कि नहीं. Second is whether it's going to be sustainable and whether it's going to be profitable. These three parameters investors are always looking for. So always rate whatever business your client is into, rate them in these three and show them that where they stand.
Yes, ma'am. Ma'am, Suma Gridhara, ma'am, from Bangalore is asking, is saying the presentation by Falguni ma'am was very crisp and clear. Thank you. And asking, how do you ensure the accuracy of your market research?
How do you ensure that you receive market research?
How do you ensure the accuracy of your market research? Accuracy of market research.
Okay, I'll tell you one thing. Accuracy of market research. Many times, there are paid market research. Many times we are doing on our own market research. Okay, the testing is that in your private project, private. Say, suppose if you are estimating that your market research, example, a jewelry. He is expecting that in Karnataka the gold jewelry will boom like anything. People will ask for it. People will sell. I mean, people will, lot of customers will come in for this kind of jewelry, what I am going to sell. But, and this is my research that is showing. So, in my pilot stage, what I do is the pivot stage I showed you in the graph of a startup is always that testing part, in the sense that I actually put one store in there, Karnataka actually, and I see that whether what kind of feedback is it coming. Okay. Second is also benchmarking with your existing competitors if they are, because I know many things are not public. So even your competitors, you may not know things, but still there would be certain things very obvious. Like is if I'm in a jewelry business, I would not know how much the other partner is doing unless he's public listed. But I would know that if he is in business since 10 years, but how many shops he has put in Karnataka, how many he has put in Kerala, how many he has put in Maharashtra. So based on that graph also I'll have some understanding. Okay, then that person may be subjective that he is based on south and he's more south based, so he has more assets there. But still there are lots of parameters by which I will be able to confirm some sanity of my research. So as a CA, when somebody gives you okay, ye mera research and you want to ensure the due diligence would be based on a lot of such facts also. And there are proper research companies who provide third party view of research report, benchmarking reports, or which you can add in your valuation report for your client. So do not mind spending and go for them, because they give you specific research of that industry.
Okay, ma'am. Ma'am, Neha Garg, ma'am, from Bombay is asking, as a chartered accountant, if a client approaches me to prepare a pitch deck, after how many years in business and at what level of annual sales should I advise them to consider seeking investment from external investors?
See, this is a very important question. Many founders are confused. You know that they always keep asking, should we raise money? Should we do this? But the real answer is that raise only when you are required. Okay, don't ask that question whether you want to raise or not. You ask the question whether it's required or not. So how is, in many businesses the business has a positive cash flow. The cash flow itself after a certain time supports. So I'll give you an example. I am a business of e-commerce where I'm doing business on my website only, and my collection is coming within 3 days. But I have to pay my suppliers after 30 days. I'm sitting on a positive cash flow. Okay. So I need not borrow money more because I was needing bootstrap money. Bootstrap money is your own paid money. So I have invested, I have started business. Now I'm selling, collection is coming. I'm paying off after 1 month. So I'm scaling up more numbers. I'm buying inventory. I can, so the more I do business, the more I'm having cash flow. So certain part of my scaling up can be funded from my own cash flow, and remaining, if I'm having this, there are many debt options that are available. If your business is profitable, you can get the debt options also to scale up to certain level. So you ask in what stage you really need capital to grow further in a very big way, where it will really impact in a value, like maybe, from getting this investment, you go globally, open up for 15 outlets, or, from a 1 million customer, you want to go to 10 million customers. You want to really scale up. So what the question is about, what is the need, rather than going in a rat race of raising funds. Because remember, once you raise a fund, you are in the run race. It will dampen your business. Means your focus will then be to raise further investment for the earlier investor, again raise money for the earlier investors, and it's going to be a vicious circle. It's going to be benefit of everybody because money will come in. Of course, new businesses will develop, but there will be a lot of pressure. So you understand why you want to why your client wants money, and if they are asking you advice, put this into some parameters of how much money is required, why they require money, if they in case raise also, where will they put it, and if it is possible by existing cash flow only, then there is no need of raising, and if there are any other options also available, no need of raising.
Ma'am, Kamal Ayerji from Pune is firstly writing, thank you for the insightful session. And she's asking one question: how can a potential investor find out about new startups which are looking for individual investors and review their presentation decks?
How do investors find the startups, like that she's asking?
How can a potential investor find out about new startups which are
Okay.
looking for individual investors?
So there are startup funds also, and also same way you have to approach chartered accountants who are, these startup companies are all requiring consulting, right? They approach their CEO only for money. So it is a network of angel investors. They have to join that. There are many angel investor networks that are going on very active. Okay, and all the startups are approaching angel investors in that network. So it is important for them to be in that network to know what are the potential startups that are coming in.
Yes, ma'am. Ma'am, Vinita Jain, ma'am from Noida is writing. Thank you so much, ma'am. A great answer, and a portion of marketing expenses over lifetime is something very interesting. Now, Rishav Saravagi from Kolkata is asking, in this bull market, SME listing has become very simple and a lot of PE investors are investing. Company also diluting stakes on the belief of having huge valuation. How to convince the companies the real metrics of sustainability who have become habitual for higher valuations?
Sorry, could you repeat the last part?
Yes, ma'am. How to convince the real metrics of sustainability who have become habitual for higher valuations?
Higher resolutions.
Valuation.
Higher valuations. Okay, got it. So here, what, only realistic things will work. If they are asking for unreasonable, then it's not going to work out. We'll have to understand what are our SWOT analysis. We have to do SWOT analysis. In SWOT analysis, you compare yourself with your competitors, and you come to know what is the area where you are having a benefit of certain, um, you know. You can say, imperishable assets you are building over the period of time for your investors. Okay, so valuation is such a game. You always understand it is, nobody can till today justify valuation in a complete sense. Okay, there are uh, each valuation, of course there are, you can say, DCF method, revenue method, or this method, but after all, even after putting all that in picture, investment is all about how your business is going to convert in future, how you are going to convince on your projections, whether you have an excellent team, you are going to have an excellent opportunity in market, you have already proved yourself whatever you have done, and there are ample uh, pipelines of customers that you are having, your cash flow is looking so and so, you are going to achieve profitability after so and so. With all these clear metrics, your valuation will be derived at. And second is also branding, that what is required and how it will reach the customer psychic. So with all these parameters put into picture, valuation is a very subjective game. You have to understand what the opposite person is willing to pay for that. Okay, certain industries are very lucrative, and investors are flocking with unreasonable valuations also. And certain industries have genuine things, but they are not more sought of. They are, yeah, they are not so much famous. So right now, if you say all SaaS project, all AI robotics companies, all solar panel energy companies, they are all having very excellent valuations. Okay, because they are able to see that this is going to be a very huge sustainable industry. So this is how sustainability is, how your business. I'll give you an example. There are so many businesses with the evolution of technology. The businesses have only closed down, but the business doesn't exist. Have you experienced? I'm sure you each one have experienced so many things that with the evolution. Like, I'll give you an example. Even the travel agent. Earlier, it was only the travel agent through whom we used to book tickets and go for a holiday. Okay, now even if the travel agent doesn't exist, I'm sure it is existing, but very 5 to 10%. 90% we are all booking online and just going. So what I'm trying to say is that certain businesses in future may not be sustainable. But if you have a solar panel, which is going to be the future, if you are into AI robotics, which is going to be in future, if you are going to be in pharmaceutical, but understanding the further needs of wellness for how the decade of generation now will come in is sustainable. Okay, if you are going to have a very old mechanism of medicines, it's all going to go away. People are more and more focused on wellness that is, beyond medicines. So I'm saying, how is your business, how is your product or business of your client going to be sustainable in future? Is this definition that, is it using the right technology, is it using the right need of the future automation, and how is it going to see in the next era? The Gen Z, is it going to provide solution to Gen Z? Okay, so if you tell me that I want to open a sari shop or chain of sari shops, I won't say it is not a profitable business, but I have to see that in future when people stop coming to shops for purchasing, do your sari business also have a sustainability? Because in future we are seeing that no, more and more shopping is happening online. Okay, or they are happening only in malls, they are not having standalone shops. Still we are going to standalone shops because we respect Benzer, we respect Emerson's, we respect certain shops that are there from brand old. But the Gen Z would not know about it. They will only go to shopping malls, or they'll only do online. They will not go to standalone shops. So you will have to build a definition of sustainability to your clients based on this. I hope I answered the question.
Yes, ma'am. Ma'am, thank you, ma'am. Thank you so much for the insightful presentation and for addressing all the queries with such clarity. Your knowledge and dedication made the session truly valuable and engaging. We greatly appreciate your effort in sharing expertise and making complex topics easy to understand. Looking forward, ma'am, for more enlightening discussions in future, ma'am.
Oh, that's really nice. And I think one question I am seeing here is, can a private limited company convert loan into equity at par and share
Yes, yes.
premium? Private limited company convert loan into equity at par and share premium. There was no previous loan agreement to convert the debt into equity. Yeah, there are provisions in company law, but over there at that time you have to say that loans when I gave this loan, it was a convertible equity. We have to, as per the ROC rules, we have to convey at that time. When we are taking a loan. So what you could do in this case is that there are still company secretary you can consult of how you can convert the debt into equity, if you have not conveyed at the time of taking debt that this was a loan agreement. I mean, this was convertible equity, because government has put a restriction. They want to know, because otherwise, at what time all big debts they'll convert into equity, and in a it will in a fraction of seconds be zero if the business is not doing well. So some declarations are required for this. So maybe directly not convertible without any penalty or anything. We'll have to find out from the company secretary.
Yes, thank you, ma'am. Pracheta ma'am, if you are there, we are having two questions for you as well. If you can address. Are you there online, ma'am?
Yes, ma'am.
Pracheta Patil.
Yes, yes.
Yes. One question is asked by, even both the questions are asked by Sai Janani Gopal ma'am from Chennai. Why
Yes.
was the GST amnesty introduced? What was the main interest of the government to consider the period from 2017 to 20?
Okay. Okay, ma'am. Thank you for the question. Actually, the main reason for introduction of GST amnesty was like for the three financial years 17, 18, 18, 19, 19, 20, there are pending litigation issues, and still the government has not recovered much of the revenue. I probably from the GST portal, what is the statistics? 80% of the revenue is still not recovered. And second thing is, other than these cases are still pending with the courts, the writ petitions are also there. And to ease the future businesses of the individuals, they have only considered three financial years starting only for the period starting. They are not considering the third, and the further notices, if they are coming into the picture, there will be till November. Probably 30th November 2024, they are still issuing notices for the three financial years only, because there after that there will be time barring them. Hello?
Yes, ma'am. Ma'am, we
Yeah.
are having one more question.
Yeah.
Out of all the factors, what is one most important factor that investor is interesting among others? And what is the weight that is given for non-financial factors over the financials result?
Which this question is to me or
I think that is meant for Falguni ma'am.
yeah,
Falguni
yeah.
ma'am. Falguni ma'am, are you there? One
Yeah,
more
I'm there.
question, ma'am, is for you. I hope that will be the last question.
No,
Out
no,
of
it's
all the
fine.
factors, out of all the factors, what is one most important factor that investor is interested in among others? And what is the weight that is given for non-financial factors over the financial results?
I understood the first part. The second part, it was a little quick.
Yes. Second part is, ma'am, what is the weight given to non-financial factor over the financial results?
Okay. So I'll tell you, the first question is that the most important of the entire slide would be your value proposition. What value proposition are you suggesting for that business that you are doing? What is the value proposition? That is a very important statement, because that defines whether your product or service is going to be sustainable and profitable. And second is that to non-financial institutions, financial numbers are definitely important. Journey, of course, each business, I'm telling you, you may consider or not consider, but finance is going to be very, very critical. Only in the case of e-commerce business, I can understand that numbers, because same customers, so same for non-financial institutions. Again, number of customers will be more emphasized than your performance, because your bottom line or something may be ignored at one point in time, because they know in future it will catch up. But you will have to still show no in future also how. Say suppose if you have 1 lakh customers in non-financial institution, and you are going to say that this 1 lakh customers are going currently buying this from me. Tomorrow I'm going to do product additions, so they will buy this and this also from me. So from these 1 lakh customers today I'm getting a 10 million sale, but now from only this existing 1 lakh investors I'm going to get 50 million sale. And whatever I'm going to increase number of customers is separate only, but at least this many customers today I have live. So the pipeline that I'm building in for the company is very strong, and this is how they will be valued rather than your bottom line numbers. So this is only the exception, that they'll value the number of customers more than the current sale that you are doing and the profit you are generating.
Okay, ma'am. Ma'am, Priyanshi Gupta from Jabalpur is saying it was a great session. Thank you. Rishav Sarangi and from Kolkata, and Ashita Agarwal from Agra is asking for your PPT.
Sure.
I would like to say thank you, Pracheta ma'am and Falguni ma'am. for taking the time to address our members and for the insightful discussions. Your guidance and expertise were truly valuable, and we appreciate your dedication to making this session both informing and engaging. Thank you so much, ma'am.
Thank you, and I'm thanking all the participants who took the trouble of asking questions and
Yes.
also enriching my knowledge, and all the coordinators also of Women Excellence. Thank you so much. Woman to
Yes,
woman,
ma'am.
we have to ensure that we really support each other and see that each woman in our profession grows to another level. I'm wishing all of you all the best, and I'm available anytime you all need to approach me for any support or help.
Thank you so much, ma'am. Thank you to all the coordinators of today's program, and thank you to all the participants for joining us. Thank you so much.
Thank you. Thank you so much.
Technical support